Good morning, everyone. Happy Wednesday. My name is Irene and I'm here with Jane from Supporting Strategies. And today we wanted to discuss a topic that's similar to some others that have come up in the last few weeks, comes up very often. And this really ties in together with the last few weeks of what we've been talking about, which is whether it's a business sale or a possible settlement that may come in, we always get asked questions once a payment is due or once a payment is to hit to the client, what would happen with the proceeds? Some questions could be, are those proceeds taxable? And a lot of questions that I'm asked is, can those proceeds, whether it's of a sale of a business, whether it would be of a certain buyout, or if it's subject to a settlement that occurred, of course, there's a question of whether it's taxable, but also, can they use a portion of the funds and send that to another business? So can they use the funds and transfer to another business? Can the funds, for example, be transferred to a spouse or to their children? Can the funds be used to give to another family member? Can they take the funds and move it directly into another business that they may own, or invest into a business that they may have no ownership interest in, but may want to buy into? And so, of course, we take a look generally at and individually at every single situation that comes up to us. So of course, it's going to be a very different answer if this is going to be going to a spouse. And we definitely want to take a look at the nature of the settlement or the buyout as well. And if this is going to be a loan, we want to make sure that we have the proper security documents in place as well. But the first step that we take is we always speak to the accountant on this matter, and we want to make sure that the accountant can guide us properly to make sure that if there is going to be a payment made to another party, that it isn't going to be taxed twice, if at all possible, to legally avoid that. Also, if it's going to be then gifted, we always consult to make sure that there's a proper gift tax exemption if it's possible to obtain one in that situation. And so it's very important prior to making any transfers and prior to just investing the funds into another business, thinking these are my funds and I could just use them now that we've earned that settlement fund, or now that we've sold this business. Instead of just thinking that we can use that for any reason, I always recommend that you have to make sure that you speak to the accountant to ensure that the way it is being transferred will not cause an issue down the line when it's then reconciled at the end of the year or the following year. And so I want to bring this over to Jane and just ask just a little bit of insight on what you've seen in this area.
Sure, thanks, Irene. So depending on type of situation is being settled, ACPA provides guidance and it covers impairment, insurance recovery, required disclosures, and the type of separate, fund of accounting for damages. And so the first thing I want to bring up is that I'm sure that Irene is very well aware is that the client funds have to be in the trust account until they are dispersed to the client. And then if the settlement resolves in the matter and there is a contingent fee basis, you need to provide the statement to the client to see what the fees and the costs were. So that would be the first kind of rule of thumb. And then another part is that the code talks about different sort of taxation issues depending on what kind of damages, awards, and there's lots of torts and contractual documents that are listed on the IRS website. And typically when people say the term compensation payouts, they mean that it's not taxable, which is not really entirely true. So each scenario has to be looked at. So for example, if lost wages are part of the award that is being settled for the physical injury or sickness, they are considered part of the compensatory damages and they're not taxed in the state of New York. And personal injury compensations can be non-taxable. However, it has to be looked at because the code mentions how not everything is going to be non-taxable. And also, damages arising from contractual claims can be taxable, such as those that are paid for lost wages and benefits and profits. So basically, the key question that has to be asked in each scenario is, in lieu of what were the damages awarded? So again, the code provides a lots of different examples, and we could talk about specific examples. And if you have any questions about a specific case that you would like us to look at, I think that could be another topic of discussion, because there's such specific rules for each one that it's kind of hard to summarize it in one. So I would be happy to talk about it further. Thanks, everyone.